Hello there. You have been hearing about liquidity and you want to use it in your trading strategy so that you can grab more opportunity in the market. You could be a newbie to the market, or you are intermediate and you want to sharpen your knowledge about the liquidity concept. So today I want you to come with me so that I will explain the liquidity concept for you in a simple way for a child to understand. So let's go there. So on my screen we have the definition of the liquidity. Liquidity simply means the pool of money in the market, the orders in the market. What if you are selling, you are buying, you are literally a liquidity in the market, because your sell order will fulfill someone's buy order. That is how the market works. So liquidity essentially move the market. So let's talk about how to use the liquidity effectively in the market. A simple definition professionally in the trading world would be that this is the definition here. In SMC, liquidity is where the smart money or institutional trader look to hunt and fill large orders. These institutional players need a lot of liquidity to enter or exit the market without causing a slippage. Just like I told you earlier, they need this liquidity in the market, which are essentially orders to feed their orders. The big guys like to use the stop losses of the retail trader and all of that to fulfill their orders in the market. So what are the type of liquidity we have in the market? Generally we have the two type of liquidity, which is the buy side liquidity and the sell side liquidity. This is the buy side liquidity represented on the dashboard here. As you can see, the buy side liquidity is always found at the swing high, you understand, because obviously the market will be coming from this end before it forms these swing highs, you understand. So the buy side liquidity is generally found there. So, and the concept behind this buy side liquidity is that price tends to go to this buy side liquidity if there is an opportunity for price to retrace back again. The next liquidity that the market could take is the buy side liquidity if the market is retracing back. So people generally, smart trader generally put their stop losses there, you understand, if you want, take profit there. So some other people will be trying to sell from this place when the market touches that buy side liquidity. But some smart trader knows that the market will obviously sweep this liquidity. So if they are buying from here after this break of structure or liquidity sweep, they are literally targeting the next liquidity, which is the buy side liquidity. So guys, this is how this thing works. So let's talk about the sell side liquidity. You know, I told you that we have the two type of liquidity. So this is the sell side liquidity right here. This is the sell side liquidity represented on this side. The sell side liquidity means that price will always, there are pending orders on the sell side, you understand. So this is the sell side liquidity right here, understand. And price will generally, as a rule of thumbs, will always try to navigate towards the sell side liquidity, you understand. So generally, if you understand the market, the liquidity in the market, you can use this concept to put your stop losses or to put your take profit in the market. So this is how this thing works. So we have the sell side liquidity and the buy side liquidity. So let's talk about the equal highs and the equal low type of liquidity, because obviously you are going to see this type of liquidity forming in the market. Majority of the time it will happen more than the sell side and the buy side liquidity. So let's go there. So let me show you how to find the equal side, equal highs and the equal low liquidity. So this is the equal high liquidity formed in this trending market. Obviously you can see that the market is coming down, was coming down initially, forming series of lower low, lower high, lower low and lower high. All of a sudden it starts forming equal highs, you understand. So the moment the price come to this place, if you want to continue the trend as a smart trader, you would want the liquidity to be swept, the equal highest liquidity to be swept to the upside before you can take your sell opportunity again. After the liquidity is swept, this equal highest liquidity is swept, you wait and let the price fill another block or a fair value gap at this level. You understand? So once this place is filled, you can now ride to continue the trend. You understand? So this liquidity helps you to see the market from another dimension. You understand? As a trader, you will want to see the market mechanically. You don't want to do it randomly, because if you are doing it randomly, you will always come back with a tear in your eye. So let's talk about the equal lows liquidity now. So this is the equal low liquidity represented here. You understand? So this is the equal high liquidity, equal low, right? I mean, this is the equal low liquidity represented here. And in this case, you are seeing that the market is in an uptrend. You understand? Series of higher highs, higher low, and higher highs, higher lows. You understand? And all of a sudden, the market forms this equal lows. You understand? So if you want the market, if you want to ride the market from these equal lows again to continue the trend, you want the market to sweep this liquidity here. You understand? The moment the prices sweep the liquidity and the market aligns with one of your conferences, which could be order block or fair value gap, then you can take the market from this discounted zone here to the upside. So this is how liquidity helps you. You wouldn't just buy the moment the price touches this place, because this is what other traders, other retail traders are doing in the market. The moment the price touches this place, they would like to put their stop loss here and continue to buy up. But the market doesn't move like that, because you are not the one controlling the market. It will take out these stop losses here before it will continue to the upside. So this is how liquidity works in the market, and I hope I'm able to influence you or to teach you something new today. And if you want to join my community to learn more, you can join the link in the description box so that we can all help ourselves grow in this market. Thank you.